The Income Tax Act 2025. Continuing with day 41, now I'm moving on to the chapter of set off and carry forward of losses. Starting with section 108, which is regarding the intra head adjustment of losses. It says that in case we have loss from one source of income and we have income from another source of income, but they fall within the same head of income, then we are allowed to set them off against each other. This is a simple provision, assuming we are carrying on two different businesses. Like one is a garment business, another is a retail business of FMCG products. Maybe we have loss in FMCG products and profit in garment business, so we can set them off against each other and pay taxes on the net amount of profits. This is a simple provision. We can always set off intra-head losses against incomes. But there are four exceptions to this provision, which are: the first one is speculative business loss. We can only set off speculative business loss against speculative business income, not against any other income, whether it's business or not. Similarly, there is this specified business loss under section 47. It's regarding those 14 specified business. We can set off such specified business loss only against the specified business incomes and not against any normal PGBP income or any other income. Similarly, there is long-term capital losses. It can only be set off against long-term capital gains. And then there is loss from owning and maintaining race horses. It's not horse races, it's race horses. If we have loss from such activity, we can only set off it from income if we have from such activity only. These are the four cases which will always be the exception in every case. Means this is the case of intra-head adjustment. These are the exceptions here, and no matter what any other provision says, these will always be there, and we can only set up these losses only against themselves and not any other. Especially LTCL is to be noted. We can only set off long-term capital losses only against long-term capital gains and not against any other. Even other, even we cannot even set it off against short-term capital gains. We can only set it off against long-term capital gains. Moving on to the section 109, which is inter-head adjustment, means when we have loss under one head. Let's say we have loss under PGBP loss, PGBP loss of rupees, let's say 1 lakh rupees, and then we have income from another head. Let's say we have income under the head of other sources of rupees 50,000. So we'll set off these against each other as long as they are in the same tax year. If we have these losses in the same tax year, then we will set off these losses against each other. So we'll have a net loss of 1 lakh minus 50,000, net loss of rupees 50,000, which we will show in our ITR. The point is here that it should be in the same tax year. In case, and this 50,000 rupees of net loss, this will be carried forward for future years. But once it's carried forward, it cannot be set off against any other head of income. Means in this example, it is a PGBP loss which is being carried forward. So in the next year, we can only set it off against PGBP income and not against any other income. Sit in here. For carry forward losses, inter head adjustment is not allowed. Means we can only make intra head adjustments and within the same business or same type of income in the next succeeding tax years. Now again, there are exceptions to this as well. Inter head adjustments. First one is regarding the loss from house property. We have a loss from house property. We can set it off against income from any other head of income. But there is a limit of rupees 2 lakh. We can only set off an amount of rupees 2 lakh of loss from house property against other incomes. If we have a loss more than 2 lakh rupees, then it will be carried forward. Then there is loss from PGBP. We cannot set it off against salary income. Means they are to be kept separate. Then there is these SSLH that I studied here. These four cases, which are always the exceptions. These are again the exceptions in interhead adjustments. Then there is short-term capital loss. We can only set it off against within the head of income, not any other head of income. Means we can only set it off against short-term capital gains or long-term capital gains. We cannot go into business income or house property income to set off such losses. Now this is a summary of all the provisions I studied plus the provision regarding carry forward. We have income from salary. We don't, it's not possible to have a loss from salary. We'll always have a positive income from that. Then there is income from house property. We head, this is the name of the head of income. Then in case we have loss from house property, we'll first go and we'll try to adjust it within the head. Means if we have some other house property, we'll try to make intra head adjustment with that. If we still have some losses pending, then we'll go for inter head adjustment up to rupees 2 lakh rupees. And if we still have any house property losses unadjusted, then we'll carry it forward for a maximum of 8 succeeding tax years. Moving on to the next head, which is PGBP head. It has two of those special cases, SSLH cases, speculative business and specified business. So in such cases, we'll first set it off against its own business. Means like this is speculative business, we'll go and set it off against speculative business income only. And if we still have some losses pending, then we'll not roam around anywhere else. We'll not go to any other business income or any other head income. We'll simply carry it forward, but for only 4 tax years, 4 succeeding tax years. Similarly, in case of specified business, we'll set off it against specified business first, and then if there is still remaining specified business loss, we'll carry it forward for an unlimited period. Then the remaining, which is the normal business loss, we'll first go for intra-head adjustment. We'll try to adjust it with any other business income. Here it means that we can set it off against income from these businesses as well, because it is any other business law rules regarding business loss, the normal business loss. We can set it off against any intra-head business income. And if we still have business loss remaining, we'll set it off against any other head of income except salary. Means all three heads, remaining heads of IFOS, capital gains and house property, we can set it off against those incomes from those heads. And then if we still have business, we'll carry it forward for 8 succeeding tax years. Moving on to capital gains head, this is a special head where in case of short-term capital losses, we'll first try to set it off it again within the head of income. Means we'll set it off it against short-term capital gains or long-term capital gains. And if some capital losses remain, we'll not go for inter-head adjustment, but we'll simply carry it forward for 8 succeeding tax years. Long-term capital loss, it's again that special case of SSLH. We'll try to set it off against its own income, means long-term capital gains. If not, we'll simply carry it forward for 8 succeeding tax years. Then comes the head income from other sources. In this, we can either have the loss from owning and maintaining resources, which is again the special kind of loss, the SSLH loss. Then again, we'll try to set it off against its own income. If not, we'll carry it forward for 4 succeeding tax years. And the remaining IFOS losses from any other type of other IFOS income, then we'll first go for intra-head adjustment. Means if we have two different kinds of IFOS sources of income, then and we have loss in one of them, we'll adjust it against another IFOS income source. And after that, we'll move on. If we still have IFRS losses, we'll go for inter-head adjustment. We can adjust it against any head of income, even salary. But in this case, carry forward is not allowed. Means if we still have losses, they will lapse in that tax year only. There is one more point to be noted in this case. Sometimes in IFOS we have these incomes from lotteries, puzzles, card games, races, extra. These are casual incomes. These are not allowed to be set off and not allowed to be carried forward. And also we cannot set off any other loss against such casual income, means some expenses or some kind. These have to be simply taxed at 30% rate, or whatever the rate is as prescribed by the law from time to time. This is again a summary of this case of carry forward. For after carry forward, how can we set it off and for how long we can carry it forward, and if we need to file return of income on time or not. Regarding the loss from house property, we can set it off against the income from house property only. In case of short-term capital loss, once we carry it forward, we can set it off against only this head of income, and the time limit is 8. And we need to file return of income on time in order to be able to carry it forward. And same is for LTCL, we can set it off against LTCG, file return on time. And then normal business losses, we can set it off against any business income. Here we'll not be able to go into any other head of income after carrying it forward for the next year. Time period is again tax years and return to be filed. Speculative business, only against speculative business, it's in both cases, but the time limit is only 4 years. Then specified business, we have an unlimited time limit and only against such specified business. Then there is loss from owning maintaining racehorses, only against such loss, such income. Time limit is 4 years in this case, and we have to find a return on income on time. And there is the case of unabsorbed depreciation. This can be set off against any head of income in the future years, except for salary. We'll be able to set it off against any head of income, and there is no time period as well. We can carry it forward forever, and we don't need to file return on income of time in order to be eligible for claiming such benefit. Then there are some notes regarding this. Whenever income is exempt, then losses should also be ignored. Means we will not be able to get any deduction because we don't have any taxable income. Brought forward losses from a business can be set off even if such business is not continued. This is a point regarding order for set off of losses. If we have losses in PGBP head, set off of losses. This means if we have different types of losses which we can set off against PGBP income, and this is giving the order. Firstly, we'll go for the current year depreciation. We'll try to finish that, and then we'll move on to brought forward losses. And after these two are exhausted, then only we'll move on to unabsorbed depreciation, because this kind of has unlimited amount of time. So we will prefer to keep it at last always. If there is income under one head and eligible loss under another head, current year loss must be first adjusted against the income before it. So it says that we have to first adjust against current year losses, and then we'll adjust against any brought forward losses. This is as per a circular issued by CBDT. Then the next point is regarding set off of losses is not permissible in case of unexplained investments, obviously. Business brought for a business loss shall be set off prior to unabsorbed depreciation, like I saw here, and unabsorbed scientific research expense. Then the last point is if a company is dealing in purchase and share sale of shares, then for that company it is considered as a speculation business, and therefore the loss from such speculation business can only be set off against speculation income. But in case of normal businesses, which mainly earn from either house property, capital gains, PGBP, whatever, for them this is not a speculation business. It is considered, this rule does not apply to him, means it does not fall under the head of speculation business for those businesses.